You're listening to the Money Shift Podcast, a podcast that helps you downshift on bad financial habits and change gears to smarter strategies. We're talking about more than just debits and credits. We're paving the fast lane to financial freedom. Here's your host, Jack Paglo.
Welcome back to the Money Shift Podcast. I'm your host, Jack Paglo. I'm here with Eric Jorn. And today we're going to be talking about probably one of the most misunderstood or underutilized topics in accounting, which is clearing accounts. So if you're finding that your P&L is a mess with different timing errors, maybe some mismatched data, a clearing account, which is going to sit on your balance sheet, really could be probably your new best friend. I know, once I really started to understand the power of these things and where they can come into play, I almost wanted to go a little bit too in-depth and created a clearing account for almost every single transaction, which you also don't need to do. But whether you're running a high-volume tire shop, a detail shop, a specialized performance garage, any sort of auto business, these clearing accounts can really help to clean up your books and give you a lot more clarity to make better decisions. So that being said, what are clearing accounts? So clearing accounts are essentially just that. They are going to be a temporary holding zone. It's going to sit on your balance sheet. And when that money or transaction clears, that's going to shift from your balance sheet to your profit and loss statement. And whether it's going to be an income or an expense account will depend upon, obviously the type of transactions. So, what we're really trying to do here is essentially isolate timing issues, isolate, transactions moving back and forth to identify maybe some things that might be going wrong inside a shop or missed opportunities for better improvements. So obviously, money is taken into an auto repair shop in a few different ways: cash, check, credit card. But regardless of how it's coming in, it's really moving quite quickly. So credit card batches are going to hit at odd times. Maybe you got a sublet invoice and that's going to trickle in a little bit late. Maybe we need to perform some payroll accruals. All of these are different beasts, but without, these temporary holding accounts, these clearing accounts, there's no way to, hold these transactions, and we're risking misclassifying income or expenses, potentially even duplicating them. Eric, any kind of initial thoughts there?
Yeah, right. Because somebody's going to stop and say, "Hey, I want everything precise, tied out to the penny." Here's we do accounting, monthly accounting for over 100 shops, and part of being able to be successful and do this at scale is to create process and rhythm. And if we were to say take every single customer invoice, every single payroll item that is made, and then try to tie it back to something else, there's really no rhythm to work through that, right? That's a very mechanical process. What we want to do is we want to address things in mass, right? So we're able to tie out, or we're able to pull all the transactions through a clearing account and then use our source data, i.e. payroll reports, could be a sales report from your shop management system or something else, and then tie it back to all those individual transactions. And what that allows us to do is to move through everything seamlessly. And then those items that require a little bit more deep diving, a little bit more investigation, right? Those stick out at the end, but it allows you to keep momentum on that account. Momentum is so important when you're trying to get things accomplished.
I think that's a good point, because, the second, I remember sitting in the staff accountant shoes, and the second, things start to get out of whack and build up and you lose that momentum, and then it happens for, 3 to 6 months, as the staff accountant, it's easy to kind of throw your hands up in the air and feel overwhelmed and say, well, this isn't getting figured out and I don't even know where to start. And we're the trained accountants, and it's easy to kind of fall into that role. So, as a business owner or somebody who's trying to wear a few different hats, it's probably even easier to just, kind of say, oh crap, this is out of whack now, and forget about it. I'm not using it. And then it's another broken process. But I think, from our side of things, I remember you always saying, we want to get close to perfect, but nobody pays us for perfect. And that extra, for example, reconciling deposits daily and tying that back to a POS system daily or even weekly is going to cost a heck of a lot more from an accounting perspective than maybe doing that once a month. The other side of that is that we really don't have boots on the ground. So I think about having, why we need an inventory clearing account. From a deposits clearing account or a cash clearing account, again, we're not going to be reconciling daily or weekly even, and that costs a lot of money. But we're also, because we don't have boots on the ground, we're not necessarily going to be able to track your inventory as well as you're going to track your inventory from a shop owner's perspective. And obviously most shop owners, as much as we want them to, probably aren't actually doing inventory on a quarterly or even annual basis. So, without those boots on the ground, it's helpful for us accountants to have a way to quickly be able to say, see the fluctuations in that inventory as that clearing account, quote unquote, is changing, and the balances in that clearing account are changing. And we'll go over that in a little bit. But it's helpful to be able to say, okay, you know what? We can at least sort of track this and then, be able to isolate problems and then identify, maybe different fixes or do a deeper dive from there, depending on the scenario.
Yeah, when I think about a shop owner and how they operate, right, their heart and soul of their business is that shop management system. And it's really the lifeblood of data, right? They're going to spend a lot more time making sure things are dialed into their shop management system maybe than they would through their accounting system. So they're going to be doing things like making sure parts are all tagged on repair orders, right? So we will use the actual parts costing from that shop management system, run it through an inventory clearing account along with all the parts purchases to get us as close as we can of a matched cost of goods sold for parts cost. Because if you're doing it, say, based on when you swiped your card or the parts vendor ACHs from your bank account, right now, all of a sudden we create timing differences, and those timing differences can be massive, right? I mean, every once in a while, a shop can get a $10,000, repair order with $6,000 of parts. And say we put that $6,000 parts when we purchased it ahead of it, but the ticket doesn't close to the next month. Well, this month my parts cost is way overstated, and the next month it's super understated. And next thing you know, we're trying to make maybe parts pricing matrix decisions. We're paying bonuses or incentivizing our people to execute, and we're working with bad data.
And I think that's where, it kind of goes back to trying to smooth out those timing differences. All these clearing accounts are really, in effect, trying to identify these issues, smooth out these timing differences. So that way, whether it's paying people bonuses off of this information, potentially, having, again, recognizing your KPIs, your performance metrics, you're trying to make decisions off those KPIs too. And without, accurate data, you're making poor decisions. And it's, again, it's another example, just like everything, of data in is data out, and it's only as good as the data that's going in. And, you might be able to get by for a little bit with just booking, your parts costs right to the parts cost of goods sold account and not using an inventory clearing account. You might be able to get by a little bit with not having a payroll clearing account. But the bigger your business gets, the bigger, the more processes you start to have, and the more complex and the more kind of growing pains that you're going to inevitably incur. That's when, these things are, in our opinion, a pretty simplified approach to solving maybe a more complex problem. And that's what's nice about them. So, transitioning a little bit, because we've been bouncing around with different types of clearing accounts and why we do it. I think as we're going to talk about the different types of the clearing accounts, it's important to understand, the very basic mechanics. So when we say clearing account, we're going to have this clearing account sit on the balance sheet. It's going to sit as another current asset account, whether it's an inventory account, a payroll clearing account, or which would be really an expense, because even though, we're paying these expenses, we're incurring these expenses, again, it's going to sit as an asset until we recognize that expense. Whether it's, the deposits, the same thing. So we're going to book this income or this expense out of our bank fees potentially, or whether we're entering an invoice, we're going to have that get sent to the appropriate clearing account. So in this case, we've been talking about inventory a little bit. We're going to book all of our parts costs as we're spending that money. Like you said, as you're hitting the bank fee, we're going to book that to that clearing account. And then from there, once we usually monthly, once we make that sales journal entry, that inventory journal entry, whatever it may be, that money's going to get moved from the clearing account on the balance sheet over to the appropriate income or expense account on the P&L. And that's really the same regardless of the type of clearing account that we're talking about. So, as we're going through these accounts, I think it's important to keep in mind that the mechanics that are going on behind the scenes are almost totally the same. Again, maybe there's a few nuances here and there. So let's start, I think, first with cash deposit clearing accounts. Most shop owners are probably going to have a cash on hand account. That's going to be separate from the cash deposits clearing account. And that's where, cash deposits and check deposits are going to live versus the cash on hand is representative of what's in your drawer. Now,
absolutely.
I think this is where, you also are going to want to have a separate deposit account, and that's strictly for your credit cards. More often than not, that's going to be primarily the need on the deposit side of things. And that's due to the processing delays that are usually incurred when you're processing credit card transactions or bundling credit card transactions. Might not hit your bank account to the next week. That might incur, like you said, that weird timing difference between maybe, the 30th is on a Thursday and then we get a deposit for, all of that prior week on the next Monday. And now we're into that next month and we're a few $1,000s off one way or the other. So, from those two types of cash and credit card clearing accounts, what do you often see as a common cause of issues maybe, and why it is important to have these?
Yeah. I mean, right. What it does is, again, a lot of this is around momentum. We can continue finishing our financial statement to make decisions off, better business decisions off of. That's the most important thing. Can we make good business decisions off these financials? We got to go back and investigate and say I don't do this, and I'll bring in my invoices one by one, but I can't finish recording my sales data and my cost of goods data until I'm 100% reconciled. And it takes me 15 or 30 days to resolve that, right? Now I've pushed that decision-making process down the road. And if there's the $300 invoice that didn't clear correctly, whether it's a credit card processor issue, it's a refund or credit or something that you had to apply and that didn't happen correctly, is that going to materially affect your decision-making, or is your financial not being done going to materially affect your decision-making? And that's a big reason why, why we, again, go down the clearing account route is it does give us time to resolve the issues on the back end. If there is an issue with tying things out perfectly, to still publish a usable financial statement where you can make good and quick business decisions off of.
So I think that, that $300 example is perfect because that's the last thing we're going to want to do is hold up, actually closing out the books for a month because of $300 and let that not material, that really small immaterial amount materially impact our decision making just because we weren't able to close the books. At the same time, we now have that $300 amount, which, worst case, maybe we don't end up actually clearing that out of the clearing account. And it has to get booked to, some sort of uncategorized, other income or other expense because we weren't able to actually, figure out exactly where this came from. And maybe it was a weird one-off thing, in the accountant world, we love dumping everything into office expense. But again, depending upon exactly what it is, at least we know we can solve this problem later. We're not going to let this hold us up. But at the same token, like you said, the $300 is also the $300 from the standpoint of maybe that's just the answer that we needed to, trigger us to say, hey, I know exactly what that $300 was. I didn't, see this one deposit timing come late in on a Monday night or whatever it may be. There's, I'm stumbling over my words because there's a million different circumstances in which that could occur. But I say that because that could just be that one little thing that we're missing on actually getting this done. And here's a quick way to identify what that number is. Kind of continuing on with the different types of clearing accounts, we have our credit card cash deposit clearing accounts, but inventory is one that I think we relied on very, very heavily in the past. And we're becoming even more kind of focused on that with all of our clients internally is the inventory clearing accounts. So this is more helpful, I think, because we can see the fluctuations in inventory over time. It's fair to say that most shops aren't going to keep a ton of inventory, true inventory, on their shelves anymore. It's mostly just going to be simple things, whether it's oil, drain plugs, washer fluid, wiper blades, little things like that. Maybe some tire inventory or battery inventory, depending upon if they're selling batteries and tires and so forth. So you could have different inventory accounts for different things, only again to help you further track your KPIs, because you don't want your parts inventory and then your parts costs skewing with your battery inventory and then your battery costs, because your tire costs, your battery costs probably aren't going to have the same margins that you can get on your parts costs. So maybe it does make sense, depending upon the type of shop you're running, to have 3 separate inventory clearing accounts, or maybe it's just one. That's a shop by shop decision, but at the end of the day, it allows to see those fluctuations in inventory without actually having to do a physical inventory quarterly. And then, we can start to address issues like parts walking out the door potentially, or timing issues, and, maybe even big job issues, depending upon the type of work you're doing. But
yeah, you brought up a good little point, right? Like, what is the materiality of when you want to go and break things down more? If 1% of my sales represents tires and or batteries, am I really breaking those out on my financial statement, or am I going to keep those compacted into my parts sales, my parts cost? In my opinion, right, if that line isn't super material and we can't make different business decisions off it, well, let's just consolidate it. Let's collapse it down, make that financial statement more simple and easier to interpret in those cases. Now, there are cases where it is a material part of your business and you're selling a ton of tires, and I want to measure that business differently than I measure my standard repair side of my business. That's fine. Let's separate them. But for the most part, most independent shops that are not tire specialty shops, they might even have tire in their name. They don't do a whole lot of tire sales, right? It's a very small percentage of it. Let's keep that controlled. So I think that's super important. Let's make sure when we make these decisions to do this, let's not make it too complex if it doesn't need to be too complex. Let's keep it simple if it should be simple.
For sure.
Again, being done and being able to make decisions, I'm going to keep harping on the same things. A completed financial that we can make decisions off of is a lot more important than any other of the minutia that's in between.
I feel like as we continue to, record these podcasts and kind of tease out some of these topics over time, if there's one recurring theme that we're going to come back to, it's that, keeping things simple, stupid, and, really trying to blend, the types of information that we need to see, the types of decisions we need to make off of that information, while still not overwhelming ourselves with that information along the way, because that's where you get bogged down, and then you're not going to do anything with it. And I think that's the best part. The accountant nerds is the best part of clearing accounts, because they kind of give you a pretty simple way of getting a lot more information depending upon the information you're trying to capture. And again, as you're thinking about how you might be able to apply these clearing accounts to your particular business, this works well beyond just any auto repair shop business. So whomever may be listening to this, you can really use this however you like. But again, it's real easy to get excited and say, oh my God, I can use this for so many things. And then all of a sudden, you're overcomplicating it again. And you need to kind of take a couple of steps back and say, okay, what am I really trying to measure? And then again, what gets measured gets managed. That famous, I can't think it was Jim Collins, but who knows? Anyway.
Yeah. So right. So I think we hit, cash credit card clearing. We've hit inventory. I think the last big one is payroll.
And then I think our new favorite, which we're even recognizing the need for more internally now, is the sublet clearing accounts. But payroll is definitely a huge burden that really can again throw off those, certainly reduce the momentum, but also really make the timing differences more apparent, and then again not have that smoothness that you want to see in the financial statements.
Yeah. So mechanics of a payroll clearing account. Why are we using a payroll clearing account versus, just taking every employee's paycheck and we're going to break that thing down? amongst every single item that's involved inside of that paycheck.
I mean, just think about the cost that would be involved in doing that per employee, per paycheck for over the course of 1 month. It would be insane. And I think that's, again, it's the same concept as to why we're using this payroll clearing account is, we're going to have the true payroll costs over the course of a month get withdrawn out of our bank account. So when we see that hit our bank feeds, we can dump that transaction into that payroll clearing account. And then at the end of the month, most payroll providers, whether it's, ADP, QuickBooks, Gusto, there's a whole host of them out there. We can keep going. iSolve certainly, we may have an internal accountant that's doing your, payroll. This is all done for you, and that's the best. But at the end of the day, they're going to have different payroll reports, and then you can, at the end of the month, grab that payroll report, make one journal entry to move all of those transactions that are in that clearing account to the appropriate categories on your P&L. So whether that's your technician wages and your service advisor wages, maybe it's your payroll taxes or your 401k, contributions, all the liabilities that are also incurred when you're, talking about payroll too. All of those things can now get categorized and effectively, balanced with one simple journal entry, at the end of the month, versus again the cost of really trying to facilitate payroll correctly.
Yeah, well, and I don't know necessarily we're saying that that's the correct way. What I'm thinking is, right, if I'm taking every single employee and every single paycheck and I'm breaking it down, that increases a ton of opportunity for error, right? More transactions, more data, more manual manipulation, more opportunity for error. What we're doing with that payroll clearing account is we're tying back cash flow back to our source, right? Our payroll register is going to be our source, that we know that it's right. That's what's going to get reported to the IRS. That's what money went into the employees' bank accounts, what went out to the IRS, to the state, et cetera, to the benefits provider, whoever it may be that's getting paid within your payroll atmosphere. Well, guess what? Instead of us, individually recording each employee's paycheck and then tying those back to a master summary report, right? Because that's the problem with a lot of bookkeepers. What they're probably doing is they're probably entering those checks in one by one, but then they're never doing the parent level reconciliation back to the payroll report. Well, guess what? We have a much more efficient process to accomplish exactly that. And it's what you described, using those payroll clearing reports.
That's funny. It's a really good point. Because I started at Kaizen and we already had this process down, I never thought about how you really needed to do this a different way. It was always just, here's a quick, cost-effective, but very accurate way of getting this done. And it made perfect sense, and I thought it was great. And then, you never really took the 2 seconds to stop and say, how would this be done otherwise? Because it almost made too much sense. And the manual errors that can build up, and then those are going to be manual errors that you might not even recognize took place in the correct month, and 3 months, 6 months down the line, you have to go chase your tail to try to find a few small things, and we're right back to spending thousands and thousands of dollars to solve a problem that really might have taken 2 seconds and is only a few cents or whatever off.
Yeah, I mean, it makes me think about, we had a client, they wanted everything, reconciled down to the penny, right? And that was the big thing. And they delayed their close, right? They didn't even finish entering the data until the 15th of the following month, which then you got to go through your close process. It usually takes about a week. Right now we're at the 22nd. And if there's any type of research or discrepancy or anything that delays that, next thing you know, we're already at the end of the month before we're looking at the prior month's financials.
Yep.
And they wanted that level of precision. And when we dug in, we found, and they were doing payroll accounting the traditional way. Well, they were not only taking health insurance expense from each individual paycheck and applying it to the health insurance expense account, but when they made the payment, they doubled it up and put it in there because they understood that I want to break down this transaction individually, but they didn't understand the big picture. They didn't understand the total reconciliation that needs to happen to make sure that P&L is indeed accurate. They understated. I think it was we were about a year in, and their health insurance expense account was overstated by $70,000. Tell me what's going to materially affect your decision making. One little amount that maybe was left unreconciled, or the $70,000 overstatement in health insurance expenses?
Yeah, I'll go with that one. Oh my gosh. Yeah, I guess this is a perfect segue, because at the end of the day, there's probably plenty of mistakes that people who are trying to do this and trying to do it the right way, can make, but they don't necessarily think about it. I think before we get into some, more typical mistakes to avoid or try to avoid as you're trying to execute something like this. But I think, I think really the biggest thing to keep in mind as, we're talking about, performing any accounting functions, especially these clearing accounts. I remember, this really wasn't taught so well in school, but again, real life teaches you pretty effectively. The first thing you got, I started working at Kaizen, the first thing you said was, just think about the mechanics of the transaction. Think about the very broad basic principles of the transactions and what you're trying to accomplish, and then work from there on, what types of accounts need to be hit, what types of accounts might need to be set up, how is this money moving? And then that helps to really start to answer so many of these questions. And I think it's so easy for a shop owner or anybody doing this who might not have that, kind of initial training to miss that step. And so many questions can be answered in that step. But, if you're trying to do the right things, but you miss that step, you might find yourself in, that situation you just described. And, that being said, again, roundabout way of saying there are some mistakes that you want to avoid. So, what do you think some of those might be, other than obviously, kind of putting the cart before the horse there?
Yeah. Yeah. So obviously you're right. Don't get lost in the weeds. That's going to be the number one thing, right? If you're getting too stuck in the details and not able to look at the completed end of that financial statement and understand that, hey, this is what it needs to look at. These are the things that we know that high level creates a more accurate financial statement, not the individual at the individual transaction level, but high level. Can I go down the balance sheet and feel confident in all of those accounts that are on there? Because that's going to translate at the end of the day into a better P&L that you can make good business decisions off of.
I think, as we wrap up here, I think that's the most important part is, and also certainly making sure you're, when you're making these journal entries, and we're going to have another episode to talk about, the mechanics of the actual journal entry and what you should want to look for, whether it's, maybe a payroll clearing account or an inventory clearing account and so forth. So we'll have another episode dedicated to just that side of things. But, making sure those, POS or payroll reports are matching those journal entries. So that way, that accuracy that you were talking about earlier, when we're making those monthly entries is there, we know that everything does tie back to those payroll reports to prevent that $70,000, liability that we didn't even, or we double counted essentially. So, I think, again, there's so many different things that you really can uncover as as we've been talking here. I've gotten like 3 or 4 more new ideas on different podcast topics. So as we're wrapping up, one of the things I wanted to say is, if you are listening to this and you have some ideas on things that maybe you're struggling with and you'd like us to talk about, we might not do it perfectly, but we'll definitely give it a shot. So let us know at kaizencpas.com. There's a contact form you can fill out, and that'll get it to the right places. But Eric, anything that you might want to throw out as a last minute closing point?
I'll continue to harp on my main saying, right? A completed financial that you can make timely decisions on is the most important thing you can do as a shop owner. So if you're not in position to receive that, it's time to start thinking about it.
Couldn't say it better myself. So thank you so much for checking us out and giving us a listen. And we'll see you next time on the Money Shift Podcast.
Thank you.
You've been listening to the Money Shift Podcast. Make sure to subscribe and share with someone who needs a little shift in their financial life. See you on the next stretch of the road.